Hello everyone, how are you today? Welcome to Profitable Peter Studio. Trust you're doing great. So today I want to show you how to trade inverted head and shoulder. Alright, this is a particular candlestick pattern that can help you to make profits. Either you are trading Forex or you are trading binary options. Now if you know how to trade inverted head and shoulder or head and shoulder, and you incorporate it to your trading strategy, you are going to be making money. All right, now I'm going to show you how to do this, and if you're ready, let's dive in. Okay, without wasting time, trading inverted high head and shoulder, usually when the market is on a downtrend, and of course it will not go down forever, it will get to a particular support where it will have to reverse back to the upside. Now also, if it's on an uptrend, it will not be on an uptrend forever. It will get to a point where it will get to resistance, and then it will reverse and go to the opposite direction. Now we can see that it's on a downtrend. How do we know it's on a downtrend? Now you can see the higher lows and then the lower lows. See the higher lows here, higher low here, and you see the lower lows, so on and so forth. All right, so ideally it should be on a downtrend before you see inverted head and shoulder. And when it's on a downtrend, all right, you see that this is a support. This is a support. Previously it was a support, and then the sellers push the price and broke through the support, and this support then became a resistance. Now after breaking out of the support, it came back and retests this zone, this resistance that was support before, and so this is the first shoulder. It formed the first shoulder. Now when it gets to this resistance, the sellers here were strong, and then they pushed the price down and formed a head. As you can see here, this is a head. All right, and at this point too, this is a support. There are buyers here, so the buyers push the price to this resistance again. See, so because of the strength of the sellers here, the sellers push the price down here, and they form a second shoulder, as you can see here. So this is the head, this is the first shoulder, and this is the second shoulder. Now this point now, is on a downtrend, and it has gotten to a point where it's even continue to go down, to get to a point where it would have to reverse and go to the upside. And then you see this inverted head, first shoulder and second shoulder. Okay, so the buyers push the price to this resistance, and the sellers push it down here and form the second shoulder. Now because it is time for these buyers to really have a day, the buyers at this point push the price and broke out of this resistance, which is called the neckline. All right, this is the neckline, and it is called a resistance. So the buyers pushed price and broke through this resistance. All right, now when it broke through the resistance, it came down and retested this resistance that is now support. All right, it was, remember here, it was support before. The buyers pushed the price down and then became resistance, and the sellers pushed the price down, it became resistance. The buyer pushed the price up to this resistance that was support before. The sellers pushed the price down here again. The buyers pushed the price to this resistance. The sellers pushed the price to form the second shoulder, and the buyers at this point again, they were strong here. They pushed the price and broke out of this resistance. So as you can see here, this look like the buyers were strong here and they pushed the price up and in the resistance, and the sellers here push the price and retest this resistance line here, this neckline, and then the buyers they push the price up. Now how do you trade this? You trade this like this. When you see the first shoulder, second shoulder, some people at this point would take a trade at the second shoulder. All right, while some would wait for it to break out of this neckline, that's resistance, break out of it, come back, and then retest it, and then before placing it. Some will immediately place a trade immediately it retests this neckline, and the particular candlestick is from here, maybe a pin bar or a doji, or any reversal candlestick pattern here for the place to trade. Why some would wait for it to break above this level. When it breaks above this level, then they take their trade here, and stop loss will be 10 pips somewhere here, 10 pips. Why take profit will be maybe 15 to 20 pips, depending on the risk to reward ratio. Right, so let me show you on the chart. Now let's see this as a chart now. Like we can see here, we can see the higher lows and the low and the lower lows. So the price, the sellers push the price and broke through the support. That is now resistance to see, and then it formed a shoulder here. The buyers push the price to this neckline. That's resistance now. The buyers push the price here, the sellers push the price and form a head. We can see that, and the buyers push the price back to this resistance, this neckline. The sellers push the price and form the second shoulder. So this is the head, the first shoulder and the second shoulder. The buyers push price and broke above this neckline, this resistance. You see, it came back. All right, you can see here, it didn't really come back to retest the line, but this is the resistance area. Now when we say resistance and support, we are not just talking about the line, we're actually talking about the area. All right, so this is resistance area. So this candlestick broke, consider it's a very strong candlestick. It broke at close above the resistance or the neckline, and the next candlestick opens and then continue to go to the upside. So like I said previously, some traders would draw their support here. Now this is first shoulder, head, second shoulder, so support to be drawn here. So when it gets to this support, depending on the candlestick that is formed here, they'll place their trade immediately. All right, while someone wants a real confirmation before entering the trade, they'll wait for it to break above this neckline or resistance before they place their trade. Now depending on your strategy, depending on the type of trader that you are, you could decide to take your trade here. You could decide to wait for it to break through this neckline before you place your trade. And when this candlestick, for example, breaks through this neckline or resistance, is ideal to wait for you to come and retest the zone again before you place your buy trade. That you can place your buy trade, say somewhere here, and then stop loss here. Now if you place your trade here after this candlestick inverted pin bar, you place your trade somewhere here, because your stop loss will be 10 pips depending on your risk to reward ratio, and your take profit will be say 15 to 20 pips depending on your risk to reward ratio. All right, so this is how briefly how to trade inverted head and shoulder. I think in my next video I'm going to show you how to trade head and shoulder. All right, now if you want to learn more how to trade the forex, you can let me know in the comment section. Whether it's forex or binary option, I will teach you how to trade binary options. I'll be making consistent profit daily. All right, you can actually trade binary options and be making consistent profit, especially if you have a very good strategy. All right, so I'll be teaching you more strategies that you can use to make money trading binary options, and also on how to trade in the forex. Now I hope this today's video is informative and you find value in this video. If you do, kindly like and then subscribe to my channel subsequently, as I upload more of these videos on how to make money trading forex market. You'll be one of the first individuals to get notified. Thank you very much. I'm gonna see you next time. Bye.